Retail sales were solid, jobless claims were low, optimism is picking up. What evidence is that we are, quote, sufficiently restrictive at the Fed?
So, I think consensus, Jonathan, in my mind is about 1% growth this year. The Fed is a little higher, kind of 1.5% growth. I think it might be a little bit higher than that. And as I look out at the year, if the Fed were to be aggressive in rate cuts, first quarter or second quarter, I think they run the risk of the economy accelerating a bit and therefore inflation accelerating a bit. And that's just a position that the Fed is not going to put themselves in. So my sense is that the right way to look at this, rather than the markets, or if you look at the Fed fund futures, they look at 150 basis points this year, and it's kind of front-ended. My sense is maybe one or two 25 basis point cuts second half, maybe closer to the end of the year. And I just believe the Fed, for very good reason, is going to remain cautious. They pretty much played a blinder since they recognized that inflation was spiraling, frankly, out of control not that long ago. We're in a very good position now, and I think for the Fed to act too quickly would put them in a difficult position. So our sense is the markets are well ahead of themselves in terms of rate cuts, maybe second half.
When you say markets, bond markets or stock markets? Because what I find interesting is how many people are saying this is a bond market problem. It's not a stock market problem, because if the economy is better than good, that's going to be positive for risk assets.
Yeah, and I think, Lisa, it raises another issue, which is we were for so long at zero interest rates or 1% interest rates. I mean, we all remember here, world before 2008. From 2008 until very recently, Fed funds averaged about 1%. Before that, for decades and decades and decades, Fed funds averaged around 4% or a little above 4%. So where we are today is not abnormal. And our sense is that the economy is adjusted reasonably well. We see that in kind of the calmness in the bond markets, the calmness in the equity markets. So there's not a panic here by the Fed to lower interest rates.